Hi, this is Jason Penrose with the Penrose Team at eXp Realty. Thank you for tuning into Jason Penrose TV. Today we're talking about the real estate market here in May of 2023. This is interesting. Stay tuned. Thanks again for tuning into Jason Penrose TV. Today we're talking about the real estate market here in May of 2023. 15,346 homes on the market versus 12,983 that were available this time last year. That's an 18.2% increase in homes on the market. 6,107 homes under contract now versus 7,212 last year. That's a 15.2% reduction in homes pending. Homes sold, 7,298 in May of this year versus 7,928 last year. That's an 8% decrease in homes sold. The month supply of inventory, 1.6 months this year versus 1.2 months last year. That's a 33% increase in the month supply of inventory. So what do we have? We have almost 20% more homes on the market for sale, about 15% less homes under contract, and 8% less homes sold this month versus this month last year. So what we have right now is we still have low inventory. We only have a 1.6 month supply. 6 months is a balanced market between buyers and sellers for supply and demand of housing. So technically it's still a seller's market from a supply standpoint. Buyer demand is roughly about 85% of normal, so it's not at normal yet. And it's because rates are hovering around 7%, and there's some buyers who just don't qualify or can't purchase what they want with the rates where they are today. You also have sellers who have a low interest rate locked in on their home, and unless they absolutely have to sell, they're going to keep it for the lower rate. Unfortunately, there are some people who have bought homes within the last 12, in some cases 24 months, that had little to no money down, like an FHA or a VA loan, where the prices have come back and they're technically upside down in their home at the moment. So even if they wanted to move, financially in many cases they can't. So they can't put their home on the market and sell it unless they want to do a short sale. So a lot of cases, I'm talking with some sellers, when their homes come off the market for sale, that they're technically upside down on their house, and so what they're going to do is just rent it out. They're waiting for the market to come back. So because of that, that's limiting inventory to come on the market for sale. So we have these two different things happening, right? You have buyers who are hesitant to buy because of higher rates, and at the same time, you have some sellers who can't sell because they're upside down or they don't want to give up their lower rate. That's causing a tightening in the housing market. So you're saying, well, Jason, what's going to fix that? Lower interest rates would fix it because more buyers would qualify. Lower interest rates could lead to higher housing prices, which might get some sellers that are underwater from not being underwater. Or you could have unemployment, become a real problem and people lose jobs, and then people have to sell their homes, and that could also change the supply and demand ratios. So where that's going to go in the next 6 to 12 months, nobody really knows, but that's what we're looking at right now. I will say this is still one of the best markets I've seen in over 20 years because you have roughly 15,000 homes on the market and just around 7,000 homes under contract. So homes are selling. So if your home is on the market and not selling, your price might be a little high, maybe the condition's slightly off, or there could be a host of other things. You can call me. We'll talk about it. 602-738-9943. Make sure to share this video with friends and family. I look forward to hearing from you soon. Make it a great day.